Dear investors, recently I have been considering adding some Chinese stocks to my existing portfolio, and therefore I looked up iShare MSCI China ETF. You can go also to iShare.com and search for this ETF. You can read and download the prospectus and also in this homepage the key information about this ETF. What I looked for, the holdings of this ETF, and I noticed that Alibaba and Tencent, they are a major holding. Alibaba with more than 17% and Tencent with 14%. And after all the others are smaller holdings in the ETF. As I already have some Tencent stocks in my portfolio, I wanted to check this company at first whether I should add from this company. So in this video, in the today's video, I will only focus on Tencent, but later on I might check other companies such as Alibaba or maybe some smaller players in this ETF. Okay, let's focus on Tencent. You can go to Tencent homepage and go to investors relationship or investors and download all the financial information, the 10Ks and the 10Q reports and other presentations. I found an interesting presentation from the company which was in 2020 and May 13th. So this is the latest presentation from the company. You can read the numbers from all the divisions, but this is more visualized picture about the divisions of the company. So the major division or business unit is communication and social, and also online gaming, media, fintech, cloud, utilities. You can see from this chart, revenue is growing quarter by quarter or year by year. So this is an impressive growing trend from the company. You can also dig deeper and read about the different businesses or business unit of the company. uh, you can download this presentation, so I don't want to go deeper. These are the financial information which are impressive, and you can see the segment by segment the margins. So the value-added services, the margin is 59%, very it's great. Online advertisement almost 50%, and fintech is 27 percentage or around. You can see also the operating expenses is growing year over year. It's 66%, and also quarter by quarter it's 5%, and also some other general and administrative costs. Year by year it's growing, but quarter by quarter it's declining. Also some IFRS gross margins and non-IFRS, but this is not much different from the previous one. You can see the capex and free cash flow information, so you can analyze this presentation or maybe check other presentations from the homepage and learn more about the company. What I noticed in the 10K report, that one gentleman, Leo Chi Ping Martin, I hope I pronounce it well, earns a lot of money every year. He has a great stock-based compensation, and he earns 10 times more than the highest CEO, highest earning CEO. So if you put this number in the currency exchange, then you will notice this is 44 million US dollar. This is this is this is a huge number. Okay, I also went to Market Screener to learn more about the company. And you see this is traded in the Hong Kong exchange. The current price is 441, and the different business segments. So the value-added service is 53 percentage of revenue, and fintech and business services 26, and online advertisement is 18 percentage, and others are 2. You can see the company is mainly operating in China. It's 97 percentage of revenue is coming from China, and almost 3 percentage from other countries. But the growing trend is high in other countries, so outside of China. These are the gentlemen, the managers of the company. We talked about this guy, Chiping Lau. He earns great money from this company. And shareholders, major shareholder is Naspers Limited. This is a tech investment company from South Africa, and this company owns 31 percentage of the company. Also, the CEO, Hua Teng Ma, owns more than 8% of the company, and also some investments companies like Vanguard, BlackRock, and the others, T. Rowe, JP Morgan owns a small portion from the company. And company, beside the operating businesses, has investments in other companies in China and all around the world. For example, Snap Incorporation, and you can see the percentage of ownership from each company. So this is an interesting tech player company which is investing in other companies as well. Okay, let's go to the valuation. I For the valuation, as usually I use the fast graph. This price is from the OTC market, so you can also buy the company in US dollar. This allows you to invest smaller amounts of money, and you can hold your investment in US dollar. My small position in this from this OTC market. So you can see the dividend yield is very small, and the earning growth rate is tremendous. So this is 30, more than 36 percentage. I'm not sure that company can grow with that on that rate for many years on. The both P ratio, the normal, the average is 36, and the calculated P is also around 36, so no difference is credit S&P credit rating is A plus, which is great, and the company has low long-term debt. This is 31 percentage, and you can with that number or with this fast graph prediction, you can calculate in a few years almost 20 percentage return, which is great, but this is only a prediction, and we don't know exactly what will happen in the future. Based on this fast graph information, I used this normal P, this 36, in my calculation. I did some Excel, my own calculation, and I used the information from the stock exchange. So in Chinese currency, the company current price is 402, and from the 10K report, the number of shares or the diluted number of shares, this amount, and also use the total equity number. From the total equity number, I divided the total equity with number of shares, and I got this 50 Chinese currency RMB price, which is of course much lower than the current price. But anyway, for the evaluation, I used the normal PE from FastGraph. This is the 36.4. And I also calculated with a commodity P ratio. And you can see from the commodity ratio, it's the share price should be much lower. But in 20 years also with this commodity valuation is 15 PE, the company will be much worse than today. But of course, I use the assumption of growth rate 15, which is much 15%, which is much lower than the prediction from Fastgraph, which is more than 30 percentage. And the discount rate is I used 5 percentage. And from that numbers, from this growth rate, and also from the discount rate, I calculated the discounted cash flow in every year, and I added the 20 years discount rate, and the numbers I got is 573, which is higher than the current price. So we have some margin of safety in investment. So from based on my calculation, the company can be a good investment, and I think I will add some shares to my Tencent position. So with that, I can grow my investment in China's companies. I hope you enjoyed my video and you could learn from that or got some valuable information. Thank you very much for listening, and I wish you a nice day. Bye bye.